Let's get some perspective here, though, on whether hitting the sell button is the right reaction. Alfred Broaddus joins us now. He has been known in the past as an inflation hawk. He's the former president of the Federal Reserve Bank of Richmond. As I just said to you, we did see new home sales in May plunge here. Bit of a leading indicator that perhaps the housing market isn't healthy without the government support in there. Does this mean, sir, that the government is going to have to come back in and offer support to the housing market?
Well, Margaret, it would probably increase the probability of that, although I don't expect the Fed in the announcement that comes out later today to say anything explicit about doing that. The tone of the language may change a little bit, and I'm talking about, of course, the FOMC statement, and it may well be that the committee may say something that sort of hints at the possibility that they'll do this, but I think they'll wait a while before actually moving. I would say that, you know, as you all have been pointing out for the last several minutes, all of May was a bad month for the economy. Started with the weak job report, then you had the weak retail sales report. So I would expect that the paragraph in this statement today about the general state of the economy will be markedly more pessimistic, less optimistic than the corresponding statement after the April meeting.
Do you believe, though, that the data that we got today on new homes and the data we got yesterday on existing homes and what they pretend about the economy raises the possibility that the Fed may have to go out and purchase more assets?
It certainly increases the probability that that will be the case, but it doesn't mean that that's a certainty. I mean, monthly data, Margaret, is volatile. The housing data, the new homes data that comes out every month moves around more than most other data. So I think we still need to wait a while to have other information confirming what seems to be this move towards weakness in the economy, I think, before the Fed's actually going to act. Keep in mind, the Fed already has interest rates at zero. I mean, policy is already pretty easy.
Right. We know that monetary policy pretty much can't get any easier than this, but the question of stability really is in the forefront of people's minds at this point. Is it out of bounds to raise the question of a double-dip recession?
Certainly not out of bounds. I would have, if you'd asked me that a month or so ago, I would have said, and I think I probably did say, that the likelihood of that was very low. And I still think that's not the most likely outcome. That's my personal view, watching the economy over the years, that you have these soft patches in the early stages of recoveries. Typically, the economy can move out and begin to accelerate again. But there's certainly, given what we've seen, not only in the housing data, but especially in the labor market, and the job market data, really fundamental economic data, there is more of a risk now than there was earlier of a double-digit decline. And I have no doubt that the Fed is well aware of that and will take that into account in its decision and in the construction of its statement later today.
You know, you're right to give us context that these are just monthly figures, but give me a sense here, sir. You know, where do jobs go? Where's the worst case for jobs and for housing before the Fed actually does consider going out and repurchasing assets?
Well, I think, it's hard to put an exact number on it, Margaret, but we did have an increase in private sector employment last month when you take out the noise from the census jobs. If this month, let's say, not only did you not get a significant increase in private sector jobs, if you got an actual decline in private sector jobs, if the sales data remain weak, and of course housing information continued weak, at some point in the next several weeks, the Fed could look at this situation and say, we got to move in and renew our asset purchase program and try to keep the economy from falling any further. That could happen. I still don't think that's the most likely outcome, but it's certainly a possibility.
All right, I've got to cut you off, sir. Thank you for your perspective. Stay with us on this shocking drop in new home sales.